We look at mergers more as a partnership so that we could provide to the same community sort of our philosophy of people helping people. And it helps us to provide these branches at, just as Mike was saying, in a much more efficient way.
The Business Journal Roundtable Series is sponsored by Advanced Technology Partners.
This is the first time we've had a banking roundtable where we've had both bankers and credit unions here. And I understand that, you're in the same business, sort of, but there are different rules. And one of the reasons why we have bankers and credit unions in this roundtable is because we've run out of banks. There's been too many consolidations here in the area. And when we look at how many banks we have, we used to have 8 or 9 of them that would come to our roundtables. Maybe that's wrong, but where are we headed with more consolidations? What's happening? Obviously, we've got a big consolidation coming up. Josh, did you want to tell us what's happening with Premier?
Yes, so Premier was acquired by WesBanco. This will be my 12th, either on either side of the table in my banking career. Sometimes it's necessary. This was a great opportunity for us and a great opportunity for WesBanco. There was almost zero overlap. Very familiar with the WesBanco folks coming from Skybank. A lot of them left and went there instead of going to Huntington. So it's a great fit for us. But what it does for us is it gets us over that $10 billion hurdle with all the regulatory expense that comes to it. And it makes us a stronger bank, but still able to operate in a community. So I think, to your question, is there going to be more consolidation and acquisitions? Absolutely. Absolutely there will be. And if someone tells you that, then it's necessary in certain instances, because we answer to shareholders, and you have to show enough growth. And there are times in the economy, which like we just hit, where things slow down, you have margin compression, and the opportunity it stretches out too many years to get back to where you wanted to be. So you have opportunities come up like we have coming up soon. It's too good to pass up. So I think you're probably going to see more of these moving forward.
Well, by the time this is published, I believe your shareholders meeting will have already occurred.
Correct.
And so how soon are we going to see the signs, the new signs?
The signs is a different story. So you'll see legal day 1 in January, where we have regulatory approval and we move forward as one institution. You'll see the conversion probably closer to like May. So we'll do a system conversion, which is great because we use the same system, which is very rare. In these instances, all of our systems are identical. I don't know who lined that up, but well done. But yeah, so you'll see probably closer to mid-year where all the signs and everything start to switch.
I will say that it's our industry overall. Banks and credit unions are both going to be merging over time. That's how we came to be here in this area. We had Ohio Edison, Tri-County, and Youngstown, 3 credit unions that we put together, and that's how Cardinal originally started in this area. So much so, you get a lot of efficiencies as well. We look at mergers more as a partnership so that we could provide to the same community sort of our philosophy of people helping people. And it helps us to provide these branches at, just as Mike was saying, in a much more efficient way. We're getting ready to open a new branch right here on 224, and that merger and partnership has allowed us to be in that position to be able to do that. So it is good in some ways that we can partner and do more, and in some ways, as you said, it's sad to see just sort of a different evolving industry.
I think there's a certain economy of scales that exists within our industry, and there are different costs that we have today that weren't borne by financial institutions in years past. It was alluded to regulatory cost. It takes a great deal of expense and investment on our part just to comply with regulations that exist. We have new technologies, and these don't come free. They are costly. And every time you make access to financial information easier to the consumer, you also make it easier for the bad guy to get to it. So there's an increased cost to security. It used to be you had to protect your door. Now you got to protect the online access from the cyber criminals. So there's a great deal of expense that's incurred by all the financial institutions. And I just think that the economy of scales to run an institution is rising, which is causing consolidations. Smaller institutions can't afford the cost of being in existence, and so they find a merger partner. So it's almost like merger being merged in some instances.
I-
I'd like to address this too, if you don't
Please.
mind, because I do agree with Josh that I think consolidation is here and it's always going to be here. And to your point, that is one of the differences between credit unions and banks. We do have shareholders. They do expect growth. Analysts expect growth. And we look at growth not just for the sake of growth, but when you have the opportunity to merge or partner with another institution, it's very important that there's some synergies there, not only in terms of the efficiency, but also the culture. And I think, any merger that's successful, there's always like cultures, and you really can get some real benefit out of that. The other part of mergers, and I speak from experience, is on the fee business side. We think about bank consolidation, but we've been very successful at Farmers in acquiring insurance agencies, third-party administrators, and we're looking at some other opportunities in the fee space to grow our, that line of business. Because as you know, banks and credit unions, that we are a spread business, and with rates the way they had been, it's been very difficult to make the spread between what we're paying on deposits and what we are getting in loans, loan yields. So the fee income has become very, very important for us. And I think when you look at the premier West Banco, I would bet that the fee income of that organization will be significant again, and it's important for us. So again, consolidation, it's not a bad thing. The thing is maintaining an identity too, where you do maintain that culture that you've been able to grow with and be successful with.
The Business Journal Roundtable Series is sponsored by Advanced Technology Partners.